Hello and welcome to another episode of Real Rich Advice. We are here on a brisk morning here in Washington, D.C. We are in the middle of December. We're in a beautiful house on East Avenue, and we're here to talk a little bit about the market as well as a little bit of the case with this house. This house closed just yesterday, so we're going to talk a little bit about how we got to where we are with this home, what the experience of this home had to do with the market that we're in right now, share a little bit about where we think the market's going, and just sort of give you a little update of what we feel the market is doing right now and where it's going. So with that, we're here at East Avenue. This was a home that had been in a family for a full generation, basically.
Yes.
And it had a full generation worth of items in the home.
Just a few.
So we want to talk a little bit about the process that we went through to get this home sold in the speed that we had it sold in, talk a little bit about the buyers, the demand for the house, pricing, etc.
So we had paperwork signed on this house back in April, and we started working with the seller, and it was an estate. So the gentleman we dealt with, he had sisters involved in this, and we helped guide them through the entire process. We arranged for hauling company, we arranged for an estate sale, we arranged for painters, but we do this with all of our sellers, whatever they need our help doing. Dealing with estates, as well as people when they're selling their regular houses, there's a tremendous amount of emotion. And on this one, we had to deal with people looking at lots of little things and remembering when they were children, when they were growing up, but we got them through the process. It took a while. Not everything happens fast in this business, but we were able to sell this house, and the family was very happy with the price. We had the house on the market for 1.1, and we sold it for $1,050,000. So they're happy, and the person who's going to buy it is going to just do a little bit of change to the house.
We'll give you a little bit of photos of the house, a little walk around just so you can understand the condition that this home is in. And with that, you might look at these photos and say, where is the value? Obviously, location, location, location. But also, we had a lot of buyers come through this house. We had busy
Absolutely.
open houses. We had lots of showings. We had people looking at it to take the house down and build a new home. We had people looking at it to build their own home. We had people thinking about putting additions on it, renovating it. We had lots of different permutations of buyers.
Yeah.
And you might ask, okay, interest rates, at the time that this house was on the market, they've actually come down. But when the house was on the market, interest rates were really probably at their peak.
Yes.
Absolutely. High sevens, low eights, generally speaking. And we had a lot of demand. And we still sold the house for $1,050,000 for a house that I guess it's livable, but maybe not somewhere I am ready to live. And so talk a little bit about what conditions are there in the market that is leading us to still sell homes for $1,050,000, have tons of buyers when we're in this interest rate market.
Well, funny you should ask, Jordan. So we pulled these statistics from our Realtor Association that covers the DC and parts of Maryland, Montgomery County close-in market. And here are some statistics that have been run through October. The November statistics are not out yet. So here's our dollar volume year over year is down a little over 18%. A little over 8. Now, when Jordan was talking about interest rates, which we'll get into a little bit more detail in a few minutes, over the last few months, actually our inventory has increased. If I look back several months, I have statistics. Here's some stuff from September in DC, where month over month, it was down almost 32%.
Okay, 32%. So supply is low.
Supply is low.
Gradually improving.
Yes.
Okay, I'm with you. Next.
Okay, and for units, the sales were down 21%.
Okay, so transactions are down.
Mm-hmm.
Okay.
Now, how about this? The median sold price is up almost 7%.
Okay, so demand, there must be demand. We got low supply. We have demand out there, which is driving pricing up.
Mm-hmm. How about this? The median days on the market, down 23%.
So even in this market of high interest rates, we are still having homes go on and off the market quicker than they were even a year ago.
And then the last one is the average price per square foot went up almost 5%.
I like it. So let's talk about why this is happening. So we have high interest rates, although they are getting better.
Absolutely.
If you remember from our prediction video last year, interest rates are at 5%.
Yeah,
They're coming down
predicted
into
that
the
last
threes.
year?
Yeah, it's
yeah,
just
it was this past fall. It was all supposed to happen.
Yeah,
How
yeah.
well do we do that? How about
We
that?
were wrong.
A swing and a
miss,
just a
definitely.
little bit. Yeah, miss.
So interest rates are high, although they are coming down a little bit
Yes.
in the last couple of weeks. We have a lot of buyers that are sitting on the sidelines. For example, we were talking with a buyer a couple days ago who has been looking at homes over the last, I would say, year and a half.
Yeah.
And they were in a rental, or they are still in a rental, and they were looking at about the $1.2 million price point. And when you look at that payment from where it was a year and a half ago to where it is today, we're talking an increase in payment of about $1,500 a month, which is not insignificant.
Not at all.
And so you have interest rates up, you have people now sitting on the sidelines because they can't absorb that interest rate hike, but the pricing is not declining, so they're not getting more for their money necessarily, although I would say there's maybe a little less competition. And so you have a lot of people sitting on the sideline, but you also have a lot of people in this town who have pretty good wealth where they are able to either use cash or show cash and absorb some of these rate increases as well. So that's created a situation where we have supply being really low because a lot of people that don't want to move are then not putting their homes on the market. We have people that still ultimately need to move no matter what. Yeah. They've relocated, they are downsizing, they're upsizing, family changes, all that sort of stuff. And so with that, you still have movement in the market.
Absolutely.
And given that supply is so low, that's what's keeping, I think, pricing continuing to climb. But, and this goes a little bit to our prediction video for next year, which I think this time I'm going to be right. There are a lot of people like those folks that I mentioned earlier that are ready to buy, willing to buy, but not buying. And I think if and when interest rates continue to decline, there's going to hit a threshold where people say, okay, now is my moment where I can re-enter the market. And I think at that moment, we might see demand really increase. And I always say that the sellers are always late to the party.
Yes.
That's the case when we list in March. People are still, the buyers are ready to buy and the sellers are still cleaning up from the holidays. Yeah. And so there's always going to be this lag where supply doesn't increase and demand really does increase. And I think that's going to have a interesting effect on the market that may or may not be positive if you're a buyer sitting on the sideline.
But we also don't know, because what's most likely going to happen too, if interest rates are going to go down, if they go down, which that's what everybody's saying, of course they were predicting that last year, but the gap between the house they're selling, the interest rate that they have on their current mortgage, and the interest rate on their purchase is going to be a smaller gap than it was this past spring. And I think, it's a thing, it feels better. And I think that's what's holding some people back. We are taking some people out this weekend that they want to get in the market now. They want to start shopping now. We put them in touch with the lender, because when the interest rates are lower, they want to be ready to pounce. As a result, they're also going to be selling a property. So people are starting to figure out that the interest rates are going to go down. They're hoping they're going to go down, and be prepared for that. So we are starting to get those people to come out.
And of course, we also over time adjust to rates.
Yeah.
So there's a little bit of that adjustment period that's happening. And I think with the Fed maybe not increasing the interest rates and therefore the banks slowly making interest rates lower, hopefully we can get a little bit of a tapered in effect versus just sort of blasting everybody back out into the market. But that's sort of where we are. So at the end of the day, your house is still worth what it probably was worth a month ago.
Absolutely.
Or a year ago or a year and a half ago. We haven't really seen values decline. If you're a buyer, there are houses out there to buy that fit your criteria. If you're a seller, there are buyers ready to buy. Yes. And it's just figuring out when is the right time for an individual situation to make the move.
And if you're thinking about making the move, get in touch with us sooner rather than later, because I've been doing this for a long time, and you know what? My crystal ball's, doggone thing's always broken. We don't know when the bottom of the interest rate markets are going to be there. We don't know at what point interest rates hit a low enough point for the Fed, and then maybe they trickle back up. We didn't know when the high was. So if you're waiting for all that, you might miss it. You just don't know. So we're here to help.
Yeah. So if you have any questions about the market, a little bit of questions about this house or what somebody's going to do with it, please feel free to drop us a comment, shoot us an email at info@richteamre.com, and we look forward to talking to you shortly with hopefully our 2024 prediction, where I'm sure this year we're going to be 100% on the money.
We are just going to absolutely nail it.
Knock it out of the park. So we enjoyed it. We hope we can talk to you another time, and we'll see you on the next one. I'm Ned Rich, here on Late Night. Do you have a message you want to talk to your friends about? Call in 1-800-NED's phone, and we'll get you on the radio. And put your name.
We'll have it ring during the videotape, during the video process.
All right, let's do this. Hello and welcome to another
Hang
episode.
on. Before we start, should I be looking at you a lot?
Yes.
Because I've been trying to do that, but occasionally I have to look at the camera.
Yeah, look at the camera and look back.
Okay.
Hello and welcome.